Hello. The company being analyzed today is Kamdhenu Ltd. This is a company which sells thermomechanically treated bars and has a very interesting business model. So, today we're going to analyze this company, its financials, and its future growth plans, and of course, what it actually does. So, let us start. First, we have a market cap of 625 crores, so it's a pretty small company. Current price of one share is 22.2 rupees. Okay. The price to earnings ratio is 8.9 times. High return on equity and high return on capital employed. Okay. What are the financials of the company looking like? Here we have the financials. Let us first go to the revenue in crores. Now you will look at the revenue and think there is literally no growth. Like in fiscal year 2022, the company's revenue was 840 crores, but in fiscal year 2025, it's 747 crores. So, what's interesting? Look at the first of all, the earnings before interest, taxes, depreciation, and amortization, EBITDA. EBITDA in that same time rose from 58 crores to 75 crores. So while revenue declined from 840 crores to 747 crores, EBITDA increased from 58 crores to 75 crores. And at the same time, profit after tax, here we have profit after tax, increased from 26 crores in the same time to 60.87 crores. So you can see profit after tax margin has expanded sharply from 3.13% in fiscal year 2022 to 8.14% in fiscal year 2025. So yeah, not a lot of revenue growth, but profit growth has been strong. As you can see here also almost 20% profit growth for fiscal year 25. I hope my math is correct. Oh, sorry. Yes. Here we have the EBITDA. EBITDA margins also increasing from 7.96% all the way to 10.09%. Earnings per share have also increased. Now, this is some kind of a different formality, I guess. Different calculation. And debt to equity ratio, you can see it decreased from 0.43 times all the way to 0.01 times. Massive decrease in debt to equity. The net worth of the company, that is assets minus liabilities, has grown significantly from 218 crores to 316 crores. Not significantly, but decent growth in the financials. Return equity and return capital employed of this company are pretty high. 21.98% return equity is pretty good, and return capital employed 24.9% is good. They're nice return equity and return capital employed. Now, what does the company actually do? Kamdhenu at a glance. This is the largest branded thermomechanically treated, that is TMT bar, steel bar player in India, around 20% market share. And you may see 22,150 crores plus of brand sales in fiscal year 2025. This company has a franchise model. Like McDonald's has a franchise model. They also have a franchise model. So this total brand sales is because of all of its franchises, which we will cover. See, 100 plus franchisees or 10,000 plus dealers, and the franchisees pay them pay them a royalty income. They pay them a fee per ton of steel bars sold because the franchises are using the brand. That is, they're using the brand Kamdhenu, and they pay a fee, a royalty income, which was around 139 crores for fiscal year 2025. This is almost pure profit margin. This has a lot of profit margin in them. The royalty income has. So very profitable, this royalty income. The steel rebar capacity, the steel rebars, 40 lakh metric tons per annum. This is the total plus the franchises. Okay. In fiscal year 2025, 36 lakh metric tons of steel rebars were sold by all the franchises and Kamdhenu themselves. So Kamdhenu also produces and the franchises also produce. So, yeah. Then, strong product portfolio for all user segments. So, what are they selling? First, Kamdhenu or TMT bars. Then they're selling structural steel. All right, structural steel. This includes the entire range of mild steel pipes. So, they're even selling mild steel pipes. And this is produced under a franchise agreement with a multitude of special contours. Okay, produce under franchise agreement. So they have an agreement with the franchises to produce structural steel. Then we have a PAS 10,000. Oh, this is kind of a rod. Okay, and Kamdhenu Color Max. What are these? These are color coated profile sheets. Okay, they are a metal product, colored metal product, and they make green buildings look stylish and elegant for industrial warehouse and housing. All right, so we got steel bars. All right, we got steel bars, we got structural steel, we got color coated metal profiles. Color coated metal profiles. All right. Now, Pan India decentralized manufacturing and marketing network. All right. So already covered 100 plus franchises are there. There are 10,000 plus dealers, 5,500 plus distributors. This is their own plant. This is the own plant. Okay, it's somewhere around here, the black one. And these lighter pinkish, skinish color ones are distributed all along India. You can see going all the way from the north to all the way to south. Here we have Kerala, it's going to Rajasthan, it's going to northeast, it's going to Odisha, almost all over India. Yeah, almost in all places of India, in all directions of India. So that's good. Now, look at this. Kamdenu branded sales turnover. Again, these are the total sales of all its franchises. Remember that. So, in fiscal year 2019, 12,027 crores of total branded sales were there. But then this saw a sharp increase. Sorry, a nice increase. 21,000 crores in fiscal year 2023 and fiscal year 2025, 22,000 crores. Volume sold, they have also seen an increase, 23.5 lakh tons in fiscal year 2019 of the bars, the steel bars sold, now 35.6 lakhs. Okay, 35.6 lakh tons of that steel bar sold. Profit after tax, now this is for Kamdenu themselves. Okay, Kamdenu Steel themselves. It has seen a nice rise, 39.9 crores in fiscal year 2019 to 80.4 crores in fiscal year 2025, 13% CAGR. All right, that's decent. We can say that's decent. Now, asset light business model. So, Kamdenu Limited, company we're analyzing, they are the innovator. They do research and introduce new products based on customer requirements in the market. Then, franchises. They manufacture products based on technology, design, and quality specifications provided by Kamdenu. Every franchise is allowed to sell its product in a particular region, which is its designated geographical area. So each franchise has to produce a specific type of product, and sorry, they have to produce a product based on technology, based on the quality and designs given by Kamdenu, and they have to sell in a particular area. Also, they have to sell through particular distributors in a particular areas. All right. Then we got distributors and dealers. Distributors are assigned a particular region, a particular geographical area, so of course they do not mess with the other Kamdenu distributors. And dealers, each every distributor shall facilitate the supply to a set of dealers in a said uh, designated geographical area of exclusive basis. So everything is exclusive. Distributors will work with only certain dealers, and franchisees will only work with certain distributors in certain areas. So, of course, yes, different geographies will be there. Now, financial highlights quarter two and H1 fiscal year 2026. Now, what is H1? H1 means first half of the fiscal year. So, quarter one plus quarter two combined. So, revenue only saw a very small increase, 3.3% increase in revenue for H1 fiscal year 2026 over H1 fiscal year 2025. Quarter two itself only saw 0.5% revenue growth, only 191 crores of revenue. However, for quarter two fiscal year 2026, profit before tax rose by 23%, while profit after tax rose by 17.7%. Now, profit after tax rising this much less, which means that lesser than the growth in PBT, which means that taxes must have risen a lot for this quarter. But still, 17% revenue profit growth is pretty good. That's pretty good. Then revenue from own facility. How much did their own facility produce? 146.7 crores in quarter two fiscal year 2026, which is a slight decline quarter on quarter. And the royalty income, though, still increased through franchise sales, a 35.7% increase to 44.4 crores of royalty income in quarter two fiscal year 2026. And it's a royalty income, it's a fixed fee per ton. It's a fee per ton. So how many tons that the franchises sell? the more total royalty income they get. And return equity again, 22%, return capital employed, 30%. This is for like H1 fiscal year 26. Okay. Continue till H1 fiscal year 26. This franchise model now allows Kamdenu to have huge capacities at a low cost. Okay, 40 lakh metric tons per annum. See, its own production capacity is 1.2 lakh metric tons per annum. Okay, steel division at Rajasthan, it's its own capacity. Okay, production capacity 1.2 lakh metric tons per annum, and the total rebars of the franchises capacity is 40 lakhs. Now, where is this installed capacity? So it seems that around 31% of the total capacity is in the north region, but 35% of this capacity is 52.5 lakh capacity. Now, what is this 52.5 lakh? It is steel rebars plus structural steel plus color coated profile sheets. All these combined, 35% is actually in the east. Okay, then 31% is in north, and we have 90, I think that's 18%, 18% coming, 19% coming from west, and 15% from east. And where is the royalty income coming from? So if we see the mix of the royalty income, we see 35% is coming from east, 32% is coming from north. All right, so north and the east region are the important ones for Kamdenu. Got it. Now, there are benefits to Kamdenu and there are benefits of franchises in this model. One benefit for Kamdenu is it allows for an increase in market share and allows for bargaining power with the franchises. All right. And of course, with suppliers and all of that, because they have so much, branded sales turnover. There's easy availability of product in all parts of the country. That's true. There's enhanced revenue and increased profitability due to royalty earned, more profitable royalty income, more percentage of their total revenue becomes royalty income, the more profitable they become, of course. And what's the win for franchises? First, they get expertise and experience because Kamdenu will provide the franchises with experience and expertise in order to run an efficient business. Then, using the brand Kamdenu, franchises can use the brand Kamdenu, and if I'm correct, it helps them raise the prices. Now, the franchises, of course, they have to produce the quality of the goods that Kamdenu desires. But when they do that, they can raise their prices. It will be a win for them. They will produce more. They get a kind of a guaranteed stuff because, again, it's Kamdenu, so they can get business and they can even get more profitable. All right. Capacity utilization provides exceptional distinctiveness and enables them to earn premium, leading to higher capacity utilization. So, Kamdenu Association lets them to utilize a higher portion of the capacity as they're producing more. All right. And it helps them get bank funding. How? Presence and brands, presence and brand grants them easy and zero hassle availability of bank funding. Yeah, because they're associated with Kamdenu, so banks will be, let's say, more lenient, more available to provide funding. And then there's a ready marketplace, ready platform in a niche market, giving facelift to the unorganized sector, new enterprise. Actually, I don't know what that means. Then, structural steel is the fastest growing segment. Okay, Kamdenu Limited manufactures structural steel under the franchise arrangement. All right, if we go up here, I want to just see what was the total capacity of structural steel. Do you remember that? So 10 lakhs per annum of structural steel capacity. Okay, structural steel is the largest growing segment. Fine. So, Kamdenu Limited manufactures structural steel under the franchise agreement. Okay, this is the one such product which continues to pioneer new innovations. All right, this is an innovative product which is the fastest growth also. Products of a multitude of special contours such as angles, channels, beams, flats, so they can be specialized. The end user industry are these structural steel structures are used in industrial structures, flyovers, bridges, dams, transmission line, towers. They're used in many places, even metro railways, other reinforcement structures. And the advantages, here we have all the advantages of it. And under their franchise agreement, Kamdenu Limited has to produce structural steel, which makes me wonder, is all their capacity right now structural steel? The 10 lakhs metric tons per annum is only Kamdhenu producing them or the franchise also producing them? It specifically says here that they have to manufacture structural steel under this franchise agreement. So maybe we will find this out one day. Actually, I should have researched this better. Now, con call analysis, earnings conference call analysis. What is management saying about the company? This is the May 2025 con call. So let's have some insights. First statement: while average selling price for TMT bars was slightly softer with a marginal year-on-year decline, we continue to hold a strong 20% market share in the organized retail branded TMT segment. Strong 20% market share they continue to hold. So they earlier had this, they're continuing to hold around the same market share. Then, second statement: our strategy continued to revolve around premiumization, which has been a key pillar of our strategy. We have consistently focused on offering a high quality premium finish, which is evident in the steady rise of our average selling price from around 58 kgs per liter. Per liter? Per liter? Is it per liter per ton? Okay, 58 rupees per liter in fiscal year 2015, 87 rupees in fiscal year 25, an increase of about 51%. So they're focusing on more premium products, and this has brought about an increase in the average selling price of 51% in a span of 10 years. Isn't that like just inflation? But what do I know? What do I know? Yes. And third statement, Haridji told you the bottom line targets for the steel industry. Okay, it could be that in that same time, maybe steel prices have declined in the 10 years, or they've remained stable while they have increased. So that could be it. That could be it. As Harish G told you, the bottom line targets for the steel industry have increased by 20%. The bottom line, the profit targets for the steel industry have increased by 20%. The royalty income has also increased by 9%. In steel, our presence in India market share is 20%. So we think we can do better in steel. We can maintain the growth of the steel industry this year. We're trying to maintain a growth of 20 to 25% this year. So the steel industry as a whole had decided that the profit target should be up by 20%. The profit growth should be 20% in fiscal year 2026. Therefore, in order to maintain the market share, they will try to grow at the same pace. So they will try to grow at 20 to 25% growth for fiscal year 26. And I think this is not exactly revenue growth, but this is at least profit growth. They're trying to grow at least the bottom line by 20 to 25%, profit growth by 20 to 25%. Then another statement: in fact, we are not focusing into the increase of the number of franchisees. Rather, we are focusing on the increase in the capacity of the existing unit. So they're not looking to increase number of franchisees they're partnering with. They're looking to increase the capacity of existing franchisees. Okay, let's read. And we are planning to increase by 20% of the capacity by end of this fiscal year, and also considering out of that around 10 to 12% will be operational within this financial year. So growth would be around 14% in terms. Oh, 14% in terms of volume and revenue of the royalty. Okay, they're looking to increase the capacities by 20% in fiscal year 2026. And of that 20% of that new capacity itself, 10 to 12% will be operational within this fiscal year. So of that 20 percentage points of new capacity, 10 to 12 percentage points of the capacity will be operational within fiscal year 26. So growth should be about 14% in terms of volume. All right, total volume growth, that is the entire franchise's volume. Okay, the entire franchise's capacity, which was around 40 lakh metric tons. So should increase by at least 14%, they're saying. And more revenue, more royalty income, more royalty income. Finally, I think this is the last statement. The last statement is the brand expenditure in fiscal year 2025 was 74 crores, out of which 31 crores is spent by Kamdhenu and 43 crores is spent by franchise units. Fiscal year 2026, we're planning to increase this expenditure by 20%. With regard to revenue, of we're also expecting the increase of the bottom line by 20 to 25% in fiscal year 2027. I think that should be 2026. Maybe I'm reading it wrong. Okay, we already know that we got this segment, we got this sentence already. 20 to 25% increase in the profits in fiscal year 2026, I believe. These are the brand expenditures. Okay, so majority is done by franchise units. All right. And they're planning to increase this expenditure also by 20%. All right, so it seems that Kamdenu is looking for some nice growth in the future by increasing their volumes and, of course, focusing a lot on their profit margins. So this was it. That is it. That was Kamdenu Limited. Let us see how they do in the future. Pretty interesting, to see a franchise model. I guess this is the first time I have seen a franchise model being implemented in the steel industry or the steel, bar industry. So yeah, pretty interesting stuff for me. That is it. I hope you also found it very interesting or slightly interesting. So bye.